always.
Take two. I remember that. Remember that Take Two? It used to be a biscuit that you could have. 100%. So our second take here today, we're talking about contingency life plans.
Yes.
I mean, what is that?
Okay, so basically, it's probably out of the three different types of life plans, the one that's most overlooked. Okay. So, say for instance now you own 100% of shares in Mont Blanc. You've built this company from the ground up. You've done it in an amazing way where you don't owe the bank money, you're not indebted, and it's a well-oiled machine and it's growing every year, but you pretty much no partners and no debt. So then you approach these CEOs and it's a fantastic success story, but what if you weren't here tomorrow? You know, there is 100 people. Their jobs, there's the business must still go on.
Okay, so what does this policy do for us?
So hopefully we do a, we've got a contingency plan where we've got directors and key people in the business and financial directors, and one of the first protocols they'll have to have is once you're gone, who steps up as maybe an acting CEO.
Okay.
And then we got to pay for a CEO's.
So you might have to pay extra. You might have to.
We might have to headhunt one of the best guys on the market right now.
Is this similar to a key man policy but different?
Well, it's a key man should be under the CEO.
Okay, so this is more for the
boss's
key man.
100%.
Should they not have?
It's
any
named
partners?
differently so we don't get confused.
Okay.
All right. So basically, we need a contingency plan where Mont Blanc will carry on.
Okay. So in a nutshell, because guys, the insurance coffee with Nick enables me to talk about these things in layman's terms or just demystify the insurance jargon. If you are a CEO, a business a person, a businesswoman, and you're the kingpin main person and there are no other partners, no other shareholders, and should you pass away, how would your business continue? And this policy would pay money into the company to enable it to move forward. There may be a set of instructions, a contingency plan that would say, go and hire Robert. You hire Robert, you get him, he's capable and he'd need to get extra pay and whatever the case may be, or plan, or headhunting, costs for recruiting, and the like.
Exactly. And we understand, I should say, that replacing a key individual such as a CEO or CFO, one of the people that have built the company from the ground up, it might take a couple of people to replace him. Not as simple as just getting a CEO. We might have to get 2 or 3 younger partners and pay them quite substantial salaries to keep the running of the business.
Another scenario would be, let's just say I'm an entrepreneur and I've got my name's Vuyo and I've got 4 restaurants. No problem, I'm the sole shareholder, and should I pass away, my wife knows nothing about running restaurants. So immediately we'd like the contingency policy to kick in so that somebody can go, she would then go and appoint somebody of that caliber that could be running those 4 restaurants.
100%.
Where she's been a housewife.
Because on that...
or the other way around. It doesn't matter. The significant spouse that would inherit the business wants it to carry on. This contingency policy.
100%. And you agree with me, those 4 restaurants in that scenario are paying for your wife's lifestyle and your children's lifestyle. You also don't want her to get those 4 assets and think, well, I can't maintain my lifestyle anymore with that, and she ends up just selling the businesses because she needs money.
And not at the right price.
Exactly.
Because she's a desperate seller.
So rather those businesses run and also then pay for your children's lifestyle.
It's a good point. Yeah. So there we go, guys. Contingency life plan in a nutshell. Awesome. Ryan, thanks for coming in.
Thanks. Anytime.
Cheers.
Always a pleasure.